One of the hardest parts about buying your first home is that most times you don't know what you don't know. And that can be the difference between success in getting the home of your dreams or being stuck having to rent for another 12 months. Let's get into it. I'm Dan with homebuyer.com. My NMLS is 227607. Our lender NMLS 423065. We are part of Novus Home Mortgage, a division of Exonia Bank. You can read more about homebuyer.com in the video's description, including our lending coverage and very important disclaimers. Also, don't forget to hit the subscribe button. This channel is full of excellent homebuyer education, which of course is different from legal and tax and financial advice, which you can better find somewhere else. I'm not a lawyer. This is a mortgage video. And when you are ready to check your eligibility to get your mortgage pre-approved, you can do that online in about 3 minutes for eligible buyers at homebuyer.com/fast. And this video is about mistakes that first-time buyers make, from the basics to the advanced, the I can't believe I did that moments, the things that may get in between you and buying the home of your dreams. I want you to be successful, so let's start with number one on the list, the first mistake, looking at homes before you've been pre-approved. Let's get this big one out of the way first. You could be wasting your time searching for homes, searching for the wrong homes even, unless you've got a mortgage pre-approval. I mean it. No matter how well qualified you think you are, or even if you think that you aren't well qualified, don't make choices, don't make decisions. Certainly don't call a real estate agent until you've been pre-approved for a mortgage. Not pre-qualified, pre-approved. They sound the same, they're not the same. A pre-approval is a verified document that says, yes, you have been evaluated for mortgage approval and eligibility to buy a home. It is a dry run that uses your actual income, your actual credit, your actual savings account balances to say yes or no, you're likely to get your mortgage approved when you go to buy a home and apply for one. When you don't get pre-approved and go looking for homes, you have no idea if you're shopping in your range or even if you can get your final mortgage approval at all. That is a waste of time. So get pre-approved to set yourself up. Do that first. Mistake 2, letting your lender tell you how much home you can afford. There's going to be a few of these first-time home buyer mistakes that are linked to getting pre-approved. This is the second one. It's up to you, not your lender, to tell you how much home you can afford to buy and what kind of monthly payment keeps you comfortable. Your pre-approval won't specifically list a payment. It's going to list a price, the upper boundary of what you can buy based on today's mortgage rates. So look past that number that moves beyond mortgage rates and know the monthly payment that you are comfortable making, because that is how you keep in your budget on your payment. And that brings us to mistake number 3, and that's allowing your pre-approval to expire on you. To get a pre-approval, your income, your credit score, your savings, they're all taken into account along with today's mortgage rates. None of those 4 items are static. They all can change. Your credit score changes, your income can change, your job can change, your money in the bank. It all changes all the time, which is why your pre-approval, when it's issued, it comes with language that specifically says that this pre-approval is not forever and it requires renewal every 3 months. And I'll add another factor on your pre-approval is mortgage rates can change by half point or more, and that will affect your payments moving down or up. Renewing your pre-approval at least quarterly, make sure that you're always shopping for homes in the right price range on both sides of the spectrum, so that when you find your dream home and you're ready to buy it, you know you'll be on track to be approved. So clearly, pre-approvals, they're a big deal around here. We advocate for them. If you're unconvinced and you want to wing it, go for it, but you already know how that story is going to end. We believe in pre-approvals. You should too. Mistake 4, hiding information from people who need it. When you're pre-approved, your lender will very likely ask you about your job, about your sources of income, your residential history. They'll likely ask you about your citizenship, about whether you're making child support payments or payments to maintenance or alimony, whether you are party to a lawsuit. You may get a whole host of other questions that you may not have expected to hear. Irrespective of what you think about those questions, answer them honestly. The info that you provide fills in the gaps for your mortgage pre-approvals, and everything is used to get you into the best home as possible, the home that you want, because remember, lenders lend, That's what they do. They want to help you buy, but they don't want to be lied to. And everything that you're asked is going to be verified later anyway, independently. If it's found that you fibbed or omitted or willingly withheld key information, your loan is as good as dead. And any good faith money that you put on deposit, that's probably going to be gone too. So be open, be truthful, be upfront. Everybody is here to help. The fifth mistake, not leaving yourself time to eke out improvements to your credit score. Okay, when you buy a home, you're rarely doing it in one day. Start some night, maybe you're laying in your bed, scrolling homes on an app, making that choice that I will not renew my lease, that I will be a homeowner. And weeks pass or months and you're still scrolling homes. But now you've started searching for how much house can I afford? What's the smallest down payment I can make? What's a condo? And those searches, they evolve, and eventually you hear enough times about getting pre-approved that you decide, I better get pre-approved. And when that happens, your search becomes real. You realize, yes, I can buy this home. I can stop renting. Your search picks up speed, and now you find that you're under contract to buy a home. And you might wish, just wish, that your credit score had been a little bit higher. Because a higher credit score can lower your interest rate and give you better payments and save you money. Except now, it's too late to do anything about it. You're closing in a month. There's no time. You can't bring your score up. It is what it is. Except it doesn't have to be like that. You can get your credit rating as part of the mortgage pre-approval that you did in the beginning, which is another reason to start your journey to buy a home with a pre-approval. We have a whole video on ways to raise your credit score. There's a link in the description. Check it out. It's a good one. Mistake 6, looking for the perfect house. All right, so home search apps, they give you dozens of ways to filter your search. You're out there looking for the right number of bedrooms, the right number of bathrooms, the right square footage, the right street, the right appliances, the right photos, the right roof, the right yard, the right neighbors, the right fixtures, the right price. That house, it may be out there, but more likely there's a version of that house, and that's really what you're in search of, because there is no such thing as a perfect home. And buying a home requires compromise. There are 6 million home buyers each year. They will tell you the perfect home does not exist, but there are plenty of homes that are still great and that are perfect for you. So find that home. Related, mistake 7, being totally in love with this home. Yes, we know, you found the one, it's gorgeous, it has everything you want, and now you're attached. And that's going to be a problem because it's unlikely that you will win your bid. You are not the only one that is making one. And thinking that you will never find another home like this, that you have to get this home or else you'll never be happy, that will make you do things that you will regret later. There are other homes, and if you don't get this one, you'll get the next one. Move on. The 8th mistake that buyers make, changing jobs for more pay, but your new pay doesn't come from salary. Earning money is good, income pays the bills, paying the bills is cool, but before you change jobs or roles while buying a house, think like a lender. Ask yourself, is my new job's income a guarantee? If it's a salary, if it's on contract, great, you can use it. But if you're taking a new job and the pay is variable based on hours or sales or partner distribution, your new income may get thrown out as part of your mortgage approval because variable pay is unpredictable. Lenders can't use variable income, and that includes overtime, commissions, bonus pay, until you've been collecting it for at least a year. So a pattern can be established. So if you want to change jobs, that is fine. But if you're in doubt about how a new pattern of income may change whether your mortgage approval still works, ask that question to your lender. Mistake 9, waiting to buy until you can make a 20% down payment. This should probably be higher on the list, but here we are. Look, no home buyer ever said, I can't wait to make a huge down payment on a home. That's not how buyers think. Buyers say, I can't wait to stop renting, to own my own home. And to do that, the goal isn't to put down 20% or more. The goal is to buy the house. And you can do that with 3% down with only decent credit subject to underwriting rules, or no money down if you're eligible for VA benefits and the VA mortgage. The National Association of Realtors tells us that the typical first-time home buyer makes a down payment that's only 7%. So save what you need to, the amount that you feel comfortable putting toward your home, and then stop there. Talk to your lender about your options, and that leads to mistake 10, which is related. Avoiding mortgage insurance, because who knows why. Look, mortgage insurance is not a waste of money. It can help you achieve a goal. Mortgage insurance is a payment that you make in exchange for the ability to put less than 20% down on a home. That's a simplification, but it's also accurate. Mortgage insurance makes homeownership possible faster because it lets you buy a home now, and that is your goal. And not every low down payment mortgage even requires mortgage insurance. Don't run from mortgage insurance. Mortgage insurance does a lot of good. It shouldn't have a bad rap. It does with a lot of people, but it shouldn't, not even close. Mistake 11, cashing out your life savings to buy this house. Don't do this. Don't put everything you have into a down payment. It is not the smart move that you think it is because life is uncertain. And having cash available to you in the bank or anywhere, that keeps you safe. When you put all your money into a down payment, that money becomes unrecoverable to you. To get it back, you'd have to sell your home or refinance it. And those are two events that take time. It's not like there's a huge interest rate break for maxing your down payment, not usually. For most people, it's just not worth it. Strike a balance between making a down payment and having cash for an emergency fund or for anything else when life goes sideways. When they say cash is king, that expression can apply here. Mistake 12, feeling like there's a rush to buy a home. Buying a home doesn't happen overnight, even when you need it to. And a seller that rushes a home buyer to make a quick decision is a seller that's trying to force that buyer to make a mistake. You have time to buy a home. Nothing has to happen right now. If the seller is expressing urgency, or if it's after hours and they're blowing up your phone, manufacturing pressure, take your time, slow down, make your best choices. It's okay to miss on this home. There will be another. Mistake 13, taking real estate advice from people who don't know what they're talking about. It is great to talk to friends and family about buying a home or anybody who settles up next to you at work or wherever. People love to talk about buying homes, but talking to people about buying a home is not the way forward for you. Your friends and family, they might know some things about real estate and about mortgage and about buying a house, but I can promise you that they don't know a lot. And I can say this with certainty because I've talked to so many home buyers in my life, and even the ones who knew the most still didn't know what they didn't know. If you want to learn about bidding on a home, ask a good real estate agent for advice. They see dozens of transactions per week and can tell you what's trending in your neighborhood, which matters. If you want to learn about getting the lowest mortgage rate, ask a mortgage lender for advice. Rely on professionals, on people who do this all day, every day. Your aunt, your neighbor, your coworker, I'm sure they're really nice people, but they're not the ones to tell you how to buy a home. Mistake 14, thinking 2 homes ahead. It's common for a first-time buyer to think about the future for their home. I'm going to buy this house today, I'm going to live in it, and then when I go to buy my next house, I'm going to rent this first one out. And that is a fine plan for a house and for financial planning, and some people manage to pull that off, but many more do not because life is unpredictable, and the plan that you're making for 2 homes ahead is thick with assumptions, like that your home will rise in value, that you can find a renter who wants to move in, that the rent you get will cover your mortgage payment, that your tax bill and insurance won't go up too much, that home doesn't need major repairs that you'll have to make, that you won't want your home's equity to make a down payment on your next place. If the future turns out the way you want, great, but you haven't even bought your first home. You shouldn't be planning for your second. Mistake 15 follows, using the seller's real estate agent as your real estate agent. When you buy a home, get representation of your own. Do not use the seller's real estate agent and do not use the builders. Those agents don't serve you as the buyer first. They serve the seller or the builder. It's right there in their contract. The duty of those agents is to get the maximum price possible for the seller of the home. That agent can't also represent you as the buyer and get you the lowest price possible because it's a conflict. So get an agent of your choosing, and if you don't have one or know one, ask for a recommendation from anyone because letting the seller's real estate agent represent you is an easy way to ensure you're likely to overpay. Mistake 16, waiving your backout clauses as a buyer. When you bid on a home, in your purchase contract, you as the buyer are given rights and protections. They're called contingency clauses. If this happens, then that happens. and there are dozens of contingency clauses you put in a contract, but 4 important ones you should never delete out. The appraisal contingency, the financing contingency, the home inspection contingency, and the right to a final walkthrough. Each of these protections are for you to make sure that your seller is honoring its commitment and to make sure that you're not buying a lemon, because that happens. And clauses are your protection. Keep them in your contract. Mistake 17, not checking whether you're eligible for home affordable mortgages. When you're buying a home, always check whether you can use a home affordable mortgage to finance your purchase. 2 popular affordable programs, Home Ready and Home Possible. They give lower rates. They raise how much home you can afford to buy. They reduce fees for closing, and they're just standard mortgage loans from Fannie Mae and Freddie Mac, tweaked to make payments more affordable for eligible buyers. Talk to your lender about home affordability and what you may qualify for. Affordable mortgages are like other mortgages, only more affordable. Mistake 18, not getting the right insurance. This one's a 4-parter because when you buy a home, there are 4 types of insurance that you should be buying also. 1, homeowner's insurance. You'll likely need this because lenders don't usually lend money without it. As you shop for homeowner's insurance, you can also make it multi-line, maybe get a discount, and buy 2 other types of insurance at the same time. The first is personal liability insurance, sometimes called umbrella insurance. Umbrella insurance protects you from other people getting hurt in your home or property and making a claim against you. A lot of people with pets, they get this one. The second one is auto insurance. Because you're moving to a new address and a new zip code with a new commute and maybe a new parking situation, all of this affects what you pay in auto insurance. So while you're shopping for homeowners, adding that personal liability piece, shopping for new auto insurance may also save you money. And lastly, the 4th insurance, I'm a fan of every homeowner having life insurance. That's my opinion, and just enough. The insurance should be just enough to cover the size of your mortgage, because in the event of your untimely demise, your mortgage doesn't just go away. Your payments will still be due. With a life insurance policy in place for at least the amount of your mortgage, the people you love and who love you can receive a cash payment for the amount of your policy, which pays off the house in full, and that lets them stay put in that home for as long as they want. A cheap policy might cost you $20 a month. Again, and it's my opinion, but I like the idea of life insurance for people who pay on a mortgage. Mistake 19, skimping on insurance. So saving money is great. Paying for insurance can feel like a waste to you. You may feel like you're paying too much, but owning a home is different from renting one, and when things go bad, they get expensive. In a home with hardwood floors, for example, 1 inch of water from a heavy rain or a busted faucet or leaky pipe, it can cost over $20,000 to repair, and that's a cost you don't want to fight your insurer for. Or when your roof starts to leak, which happens with a lot of homeowners, you don't want to fight for reimbursement. A bare bones insurer might withhold payment from you. A better insurance company will not. Understand that with insurance, a cheap policy is often the most expensive. When something goes wrong, you don't want to fight to get your money. Home repairs aren't cheap, so maybe pay a bit more and get better coverage. Mistake 20, not accounting for other costs outside of your down payment at closing. And when you buy a home, in most cases, you will bring more to your closing than just your down payment because there are costs associated with buying a home. You will have costs for getting your mortgage set up and costs for your notary who will witness your signing. You'll also have state and local government costs for recording your mortgage and for issuing your deed. And you may pay a transfer tax, that's a buyer sales tax in certain municipalities. And generally, these costs are 1% to 2% of your purchase price. You will want to budget for that on top of your down payment. And guess how you can find precisely the amount that you'll need for your closing? By getting pre-approved. It comes full circle. You knew that I would remind you of that. Mistake 21, you are not saving money for home repairs and maintenance. Look, when you own a home, things break and they break down. Ordinary things, windows, appliances, floorboards, and you will want to replace things like furniture. So plan for it. so you can fix it. A good rule is you'll spend right around 1.5% of your home's value on repairs, upgrades, and improvements annually. That's $1,500 for every $100,000 in your home. Have that money set aside in advance. And lastly, mistake 22, you're assuming this list covers everything. Look, I've been working with first-time homebuyers for a long time. I've been doing this for 20 years. I've seen a lot, and I know how important it is and what a sense of accomplishment it is to buy your first home. It is a big deal. It really is. And in your desire to stop renting and get your own place and build your own wealth, you will make an unforced error somewhere. Many people do. Not because you mean to, but because buying a home is an emotional experience as much as it is a financial one. It will be something that you look back on and say, something that you've done, say, that was dumb. And that'll be a lesson that you can pass on. So if you've got one now, go ahead, put in the comments for everyone else. It's okay to make mistakes. Just don't make the ones we've talked about here, especially the one we started with about not getting pre-approved. Get pre-approved first before you do anything else. It's your starting point. Everything starts with a pre-approval when you're a home buyer. And you can start that pre-approval right now on your own schedule at homebuyer.com/fast or with another trusted lender that you prefer. Thank you for watching. Subscribe to our main channel for more mortgage news. I'm Dan with homebuyer.com. Remember, pre-approved buyers do better. Happy home buying.